What's going on? This is Mortgage Mondays. Let's talk how to get the sneaky advantage. I'm trying to put a house in contract. I keep writing offers and I keep getting rejected. It doesn't feel very good. I've tried 8 times in a row. I've been rejected every single time. My plan is just to try another 18 in a row because I heard that you should just keep throwing offers at houses like spaghetti on the wall until something sticks. Meanwhile, prices keep going up and so do rates. Do you think that this strategy is a wise one?
Do not. I think it's about time you get the different parties together.
What you're saying is maybe form a unified front, get the Power Rangers to join together to form one big Power Ranger, or make a Voltron of agents working on my behalf to get the house in contract? Tell me more.
Absolutely. Obviously, assuming you're already working with a realtor, you're already working with a lender, I can't tell you how common it is to have a buyer that has not introduced the two. And for whatever reason, I can't understand why, but when you get Thor and when you get Captain America together, Avengers start looking a lot stronger than the individual parts.
Such a good point. You don't just grab random superheroes and throw them together and say all superheroes are the same. You got to have a synergy between the pieces, especially if you're thinking about how to beat the bad guy. And in this case, the bad guy is the listing agent and you're trying to overpower them so that they take your offer. And you've got a whole bunch of other people out there that are trying to write a better offer. And all you know is it wasn't accepted. You don't know why it wasn't accepted. You're not privy to the conversations that are being had behind closed doors. But we as realtors and loan officers, we know exactly how this process works. We know what conversations are being had and why. And I make a living out of training real estate agents. And you were a real estate agent when I met you. You actually have agents on the one brokerage that you're overseeing too. So you see the importance of negotiating and building a relationship and having a, what's it called when you have a war? There's 2 different.
Coalition.
Contract coalition. That's what we should call this. So in this contract coalition, there's actually a third party. It's not quite as important as the first 2, but it can still round out the team, kind of like Ant-Man. I was watching an Ant-Man video on the plane yesterday. I forget he's one of the Avengers, but he's still in there, right? And that's your insurance company. You're still going to need them. So if you want some extra protection, Christian, what can people do?
Absolutely. Well, moment from our sponsor, National Real Estate Insurance Group understands that your focus is on running a business, so they make insurance as easy as possible for investors. NREIG's program is exclusive to real estate investors, offering monthly reporting, monthly billing, and coverage for every phase of occupancy. If you're looking for a specialized insurance agency focused on ease of use, look no further. Visit nreg.com/BPYT to partner with the industry experts at National Real Estate Insurance Group. That's NREIG.com/BPYT to simplify your insurance experience.
So we've got 5 ways that your realtor and your loan officer can and should work together to protect you. Your insurance agent is a part of that team, of course, but they're not really going to help put you into contract as well. That's why we're not talking about them as far as your coalition here. Number 1, when you're getting pre-approved, there should be a conversation between your loan officer and your real estate agent about what you're pre-approved for, how offers are going to be presented, if that pre-approval amount will go up or down, and why. Can you share what your advice is for how loan officers and real estate agents should be working together during the pre-approval process?
Yeah, number 1 is that make sure you're getting a pre-approval, not a pre-qualification. This is where your loan officer actually goes through your income, verifies your debts, verifies your assets. A pre-qualification is what a lot of banks do, where you walk in and you say, I make $200,000 a year, what can I buy? And they tell you, right? You don't want to go into contract and figure it out in the 15 days that you have for your loan contingency, right? Number 2 is you want a custom tailored pre-approval. This is something that we do unique at the one brokerage. Let's say, example, you qualify for a $700,000 house on your initial pre-approval. Let's say you find that $750,000 house that you fell in love with. Your realtor wants to get it for you. Your realtor obviously wants to make the extra commission. However, it's the house of your dreams. It's the one you want. You need it by any means necessary. We can edit, custom tailor your pre-approval. Maybe it's paying down a little bit of debt. Maybe it's going a little bit higher on your debt to income. The nice thing about our pre-approvals is that they always have wiggle room. We never pre-approve somebody right off the bat to their absolute tippy top max, because if interest rates change or down payments change, you may not be approved. So that's where having that contact, that coalition between your loan officer and your realtor can really come into play in getting an offer accepted, where if you have a same hour or same day turnaround where your realtor says, we found a 750, we need it right now, call up your loan officer, custom tailor that pre-approval, get that $750,000 house in contract.
So what you're saying is we may give you the pre-approval for $750,000 because the last thing we want is if you're only pre-approved for $745 and you find a house at $750 that you love, you're at the offer, you find out you got to bring the extra $5,000 in cash. We'll typically give you a little bit less because rates might go up or insurance on the house might be higher, taxes might be higher, all those things that affect the debt to income ratio could adjust. But in many cases, if they call us first, we're like, oh yeah, we could get you in at $760, that should be okay. And your realtor needs to know that because what if they set up the search for $750 or they just never even tell you that the perfect house hit the market, but it was 10 grand more than what they thought you were approved for. If your loan officer and your realtor are not talking first, they won't realize that. There's another one that you should think about where just because the house is listed for $760 doesn't mean that you have to pay $760. So sometimes if realtors don't realize that, you can still write an offer at $750 on a $760,000 house, depending on the days on market. Number two, the loan officer can actually help with putting the house in contract. I think this might be the most important out of the five. It's a huge difference, huge. We've had to become experts at helping put people in contract because we're in California. It's a competitive market. At some point, we will be selling houses across the country in other states. And I think we're going to dominate because we've been sitting here lifting heavy weights the whole time. And it will be much easier when we get into some of these other states. But it's true that there may be 12 offers and you being the 11th best one or the 10th best one or the, I guess, second or third, they don't help you. If you're not first or last, you got to get accepted in there. So what are some things that loan officers and realtors can do to work together to get that house in contract for their client?
Well, Ricky Bobby, obviously, jokes aside, on the first initial contact, right, where that realtor is reaching out to the listing agent or even the seller, if it's a direct for sale by owner, they're making their case, right? I remember when, I was in production a lot for real estate, you used to write love letters, right? You used to write letters to the listing agent saying, oh my gosh, these are my kids. We can see ourselves being raised here, But nowadays, that's been replaced a little bit by the realtor making a good case. And in rare situations, like what we do, is the lender actually calls. So now imagine you're the seller to a property and you're getting called by the realtor saying, hey, this borrower's qualified, yada, yada. But then immediately you get a call from the lender that says, hey, we only do pre-approvals, right? We can do a 10-day loan contingency, right? We can do all these things to make a really, really, really competitive offer. And by the way, we've already had the borrower's file submitted to underwrite. It's already gone through a credit check. It's already gone through an income verification. It's already gone through asset analysis, right? Like we're good. We know this can close, right? Assuming a good appraisal comes back, we're ready to rock, right? This borrower's qualified. They're a rock star. They're a real big buyer you got on your hands here. Let's get this thing closed. That now has a little bit more staying power with those sellers, right? When they're looking through those 12 or 13 offers in some of these competitive markets, maybe one, maybe two of the lenders called, right? They're going to say, oh, well, this lender called. He's on, he's on it, right? He's on the ball. He's ready to rock. We've experienced makes a huge difference on that initial offer.
There needs to be more education. I just realized in the middle of you talking, people know so little about what it actually looks like when their realtor is trying to get their house. The top people in the industry know how to negotiate that, but they're usually so busy no one wants to work with them. Or they just do listings, which we're going to get into later. Most realtors will send the offer in an email to the listing agent and not even connect with them first. If you get a realtor that just calls them on the phone and says, I sent an offer, I'd like to tell you about it, you already have a top 20% person, okay? But being in the top 20% is only going to help you win if there's only 5 offers. The minute you get into more than that, you need more than just a phone call. Your realtor should be calling the listing agent to tell them all the reasons why you are the best candidate and to find out what are your other offers and then come back to you as the buyer and say, do you want to pay more? Now, there's a lot of people listening to this who won't like that as soon as I say it, but let me tell you, Christian and I both buy real estate. And we ask the question of the realtor, what are the other offers and where do I have to be to get it? We don't throw spaghetti at the wall and say, let me just shoot out a low offer and hope that it works. I want to know, it's listed at 700. You can get it at 740. Let me make the decision if it's worth 740 or not. I can always walk away. But I don't want to write an offer at 715 if somebody else is going to write one at 735 and get my hopes up only to get turned down, which would have been obvious. So the realtor should be finding that out for you. And then your loan officer should be calling. And they should be explaining, just like you said, they are super qualified. This is the perfect buyer. They've been trying to get a house for the last 5 attempts. They never got it. They're not going to back out if they get this deal. They've already been approved. All that I need is an appraisal and one other little thing, and they're going to be good. They have plenty of funds for this house. This is the right person. I wouldn't be wasting my time. That goes very far when you're the seller and you're evaluating all of your options to have a bunch of people telling you why this person is the strongest candidate. And we treat this little section of the buying process, which is probably the most important, with such neglect. So if you're striking out This is a very good reason why you're striking out. Your loan officer and your realtor should be fighting like a junkyard dog over that last ham sandwich to get you into contract. Anything less, they're not representing you like they should be. And I would say, would you agree, Christian, if nobody tells the realtor and the loan officer you guys need to be working together, in general, they won't?
Oh, 100%. I mean, and people don't know this. Like you said, I mean, most realtors, most loan officers, they're not even in the top 20%. A lot of them aren't in the top 50, right? I mean, they're not in terms of production, right? I mean, I think like 20% of realtors close 80% of the business, right? Just unifying this front, this coalition, so to speak, is literally a difference. In so many of these offers, if you got 15, one of them are doing this. And odds are that's the one getting all these offers accepted, right? It's the one lender, it's the one realtor. And you guys can look up, listings on Zillow. You can see the buyer's agents who are doing all the volume, right? I mean, they got the most reviews, they got the most contracts, they got the most closings. They're doing things like this, right? And if the lender's not doing it, the realtor's not as strong as they could be in terms of competitive offers.
Did you know, Christian? I didn't, it was a couple years ago that it happened, but you might not be aware that Zillow started to change the way that they would show a realtor's past production. They started hiding deals that realtors had closed that would not show up on their site. So it used to be every single deal that I closed, Zillow would show, and you could go look me up and it would verify that David sold these houses. And it would be like, here's the 80 houses I sold last year, where they were, what they sold for, the condition of the properties, what type. So if you wanted to vet me, 80 deals in the last 12 months, here they are. You could actually see who the clients were that we helped, how many were buyers, how many were sellers. Well, Zillow started to only show the full list if you bought Zillow leads.
Of course.
So if you stop buying your leads from Zillow, they would then make it look like you weren't as good of a realtor, but the realtors who bought Zillow leads would get it. Guys, that is just one little tip of how often you are ripped off by people in the real estate industry, and you cannot trust the information you get carte blanche from anybody. Always ask questions and always tune into episodes like this where we will give you it straight from the horse's mouth, because we have to exist in this world that is incredibly deceptive. But hey, when there's a lot of money to be made, people will start fudging the corners with deception and maybe telling half truth. So great point. Also, you want your loan officers to explain to the selling agent that you will close quickly, that they've already underwrote certain parts of your file, and you will have a clear to close within X amount of days after the appraisal comes back. If that's not happening, then there's no way that the seller could know if you have a real pre-approval or something they called a pre-approval, but they haven't looked at everything, or maybe a pre-qualification that sounds just like a pre-approval and you don't realize it's very different. Basically, you want a lender that will underwrite as much of your stuff as possible before they give you a pre-approval letter. And what the lenders want to do is do as little of it as possible before they give you a pre-approval letter, because they don't want to waste their time if you're not actually going to get the house in contract. But you don't want to go put a house in contract if you don't already know, like you've looked into my file deeply. So Christian, I know that we've structured some stuff on the one brokerage to make sure that pre-approvals go through a stringent process and they have a short turnaround time. Can you just give people like an idea of what that looks like briefly, and then how they can ask their loan officer, if it's not us, what they're doing on the pre-approvals?
Yeah, it's funny. We actually get almost the opposite feedback where we ask for too much up front, right? Like we ask for everything. Yeah, it annoys people like, oh my gosh, I haven't even put an offer out on property yet. And we say, well, yeah, our job is to make sure you can close, right? Let's not go waste all this time and waste your realtor's time and waste your time and get frustrated and have you go fall in love with the house at an open house and lose the property. If your lender is not requesting docs, is not going through your bank statements, is not thoroughly reviewing your tax returns up front, and I'm talking about before you write the offer, you're not getting a pre-approval. You're getting some little pseudo general review of your finances, and the loan officer, I hate to say this, but they're kind of going to wing it, right? Like so many times they'll go into contract and the loan officer is like, well, I'm good. I can probably figure it out. And okay, they might be good, but they need to be good before you go into contract, right?
This is why when deals fall out of escrow 2 days before they were supposed to close and everyone gets pissed and they say, you told me that you could do it. Well, they had to tell you that because otherwise you'd have went to somebody else. So they ended up, I don't want to say lying, but they're stretching the truth. Like we said earlier, it commonly happens in the industry. The only way you can really know is if they ask for everything up front, which can be burdensome and cumbersome when you're getting the pre-approval. But what you're saying is this is a better overall way to do it, so you can be sure going in that you can actually buy the house you're writing the offer on and spending the money on. You're spending money on inspections, you're spending money on pest inspections, you're spending money on an appraisal. Give me $1,000 into this thing and then find out you couldn't get the loan in the first place. That's a terrible investment.
100%. You're giving yourself a competitive edge, right? I mean, even when we issued a pre-approval, if it's for $700,000, but you want to write it $650, don't give the realtor that $700,000 pre-approval.
Yeah.
Let us rewrite it to $650 because now the listing agent knows you can go to $700, right? Like,
that's right.
Let's match your pre-approval to what the offer is and make sure that, you're not losing yourself any competitive advantage by showing your cards too soon.
That is such a good point. And I'm glad that you brought that up. Like, if you show pre-approval for $700, but you wrote it at $650 and I'm a listing agent, what do you think I'm thinking?
Of course. You can go higher.
You can afford more. And I'm going to tell you that I got higher offers, even if I don't, to try to get it to go up, or I'm going to get a verbal offer and say, well, now that's an offer, so come in higher. Versus if you have the loan officer call and the listing agent goes, well, they wrote an offer at $650 and they're approved at $650, but I kind of think we could get more. The loan officer can say, oh, I'll get you a higher pre-approval. They'll be fine.
100%.
When you're having the conversation, much better than a blanket letter because everyone's lazy. You see the theme here is that people don't want to work hard. That's what this really comes down to. They don't want to work together. Well, you didn't beat Thanos by not working hard and not working together. It takes every single thing those Avengers have if you want to get a house in today's market. Moving on to number 3, the loan officer can actually help save you money on the mortgage when you have the right relationship with them. So can you explain some of the ways that loan officers can work once you're in contract on the house in conjunction with the realtor to save money for the client?
Yeah, obviously, in terms of being a broker, we have access to multiple different lenders, right? So if an appraisal comes back low, we could resubmit with another lender, save you maybe order a second appraisal. Shopping PMI versus just shopping interest rate, right? So a lot of people don't know this, but when you go to a bank, they got one PMI rate, whereas different lenders have different PMI rates, right? They have different companies that insure those loans. So we just had a situation where, the borrower went in contract, had an interest rate that was a little bit higher than another lender that we had in our network, but their monthly payment was actually lower because their PMI was less, right? It was, $50 difference, whatever it was, but it compensated for the difference of the interest rate.
Right.
Something that not a lot of people think of. They just look at the interest rate, but this person was looking at the interest rate and saying, why is the higher interest rate a lower monthly payment? It was due to the PMI difference. And that if you're close to your debt to income, that may be the difference that keeps you below the threshold.
And even if you're not, it's not a huge difference, but hey, it's free. Right? If we're just, over a 30-year period of time, even a small difference, if you keep that note the whole period of time, that could be $65,000. It might be even more, right? And another thing is the interest is often tax deductible. The PMI may not always be that way. So there are times where a higher interest rate could be your friend as opposed to the PMI. And some of the loans, the PMI never drops off of. That might be a different conversation to have. You tell the loan officer, no, I'm going to hold this property for 10 years. And they go, well, for the first 5 years, the higher PMI is going to cost you money. But then when it drops off, the lower rate's going to save you money. So you want to have that conversation with the person, which frequently just never happens. All right, the next strategy with when you're in contract, what your loan officer and your realtor can do to help you save money is the 2-1 buy down. And after that, we're going to talk about finding rates on sale, but specifically the 2-1 buy down. Christian, explain what that is and then explain how a realtor can use that as a tool to get you a cheaper mortgage, even if you're paying more money for the same house.
Yeah, this is the classic, whether to pay points, whether to take a buy down program, or finding the rate on sale, as we called it in a couple of our last episodes, right? The idea is the loan officer is working all of these different strategies, all the tools in their tool belt, so to speak, right? You're going to use Thor's hammer, you're going to use Captain America's shield, right? You're going to use the item that gets you whether it's the lowest payment or the most competitive advantage in writing the offer, right? And this could be a buy down program. This could be rates on sale. It could be any of these topics, but ultimately it's finding these sweet spots in a loan program to save money, right? And good loan officers have access to all these things, right? Some lenders may only have a buy down, but not have, a rate that's on sale. They may just have a fixed one they're offering for the day, right? That's where having a loan officer that knows how to pivot between these lenders and who's good at what and where to pivot to it helps you structure your deal in a way that leads to success.
So the 2-1 buy down is a way that a person buying a primary residence can get a lower rate for the first couple years, correct?
Correct.
And the realtor who knows that can go in there and say, well, you may have to pay this much for the house, but the first 3 years of the deal, the first 2 years of the deal, you may be able to get a cheaper mortgage, which can take the edge off. And then during those first couple of years, rents are going up. So then if you move out of the house, the increased rents have made up for whatever you thought you might have had to pay a little bit more for the house. And overall, you end up paying less. And then we also mentioned that there is a rate stack where different interest rates can be bought down for different amounts of money. So your loan officer should be looking at what's the best deal for your closing costs. If I pay $3,000, can I get it to here? And normally it would be $6,000 to get it to the next bump down, the next eighth of a point. But hey, it might only be $3,500 to get the next one. If you don't have a lazy loan officer, they'll be looking for ways like that to save you money. Now, moving on to number 4, there's actually negotiating. And you can have a lot of money that gets saved when your loan officer and your real estate agent are on the same page. page because your loan officer can use seller credits given to you in the transaction to buy your rate down and get you a better rate. And the realtor is the one that has to negotiate for the credit. So what is your advice on how realtors and loan officers should work together to get seller credits for their clients?
Number one piece of advice is get them. I mean, it's the strongest tactic against the interest rates right now. I mean, it's the only thing that can single-handedly combat high interest rates, right? And you're not going to get seller credit that gets you down to 3%, but when rates are 7, you might get a 6, right? And that's saving you 1% interest per year for God knows how long. I mean, that's a win, right? So have a loan officer that understands how much seller credit to ask for, what the program allows for. For instance, a lot of people don't know this. You can get more seller credit on specific purchases, primary, investment, second home, conventional, non-conventional, FHA. They all have different limits of how much seller credits you can request and how much of them can be allotted to your interest rate, right? This is a conversation your realtor needs to understand, because if you're looking to go get the max to get the biggest benefit possible in the interest rate, your loan officer needs to know what that max is and how it can be attributed to the rate.
Yes, that is something that you and I figured out, especially like when I was on that spree buying like 18 houses at one time, and you had just gone on a little spree right before that. We found that if the person wants $600,000 for the house, to get them down to 580 is like pulling teeth. But if you say, hey, $600,000 and $35,000 in closing cost credits, they go, okay.
It's a funny thing. It's so true.
Which is the functional equivalent of paying $565. But if for some reason they're inexperienced, they don't know. And often their realtor who's representing them on the listing is only thinking like, yeah, I don't want the purchase price to come down because that makes my reputation look bad. But if my clients throw seller credits at it, doesn't matter to me. And that's what you find. And oftentimes those seller credits can get you a cheaper deal than what you'd get if you got the actual purchase price paid down. So always, always, always look for a way to get seller credits and communicate with your loan officer how many you get. What you don't want is to say, hey, we negotiated $50,000 in closing cost credits, and loan officer says, well, that sucks because I can only use 30,000 of those based on the closing costs that you have. You just wasted $20,000. And again, this happens when the loan officer and the realtor are not on the same page. All right. Moving on to number 5, this is one people don't think about. When you're selling your house, Thor and Captain America can work together too. And this has to do with, what was the word you had for describing this?
A cross-qualification, as you put it.
The cross-qualification, if you're in Australia. Christian calls it the cross-qualification, and I made it silly. So this has to do with when we at the David Green team are representing someone and we're selling their house, we are getting calls from the loan officers, if they're smart, saying, hey, you should use my client. And I want to believe them, but oftentimes people out here in California are savvy and they'll do whatever it takes to get a contract and they'll lie. So what I do is I say sometimes, hey, my seller wants your clients to get pre-approved with their company, which happens to be the one brokerage. And then we get to see everything they're claiming they have, and we get to see what that loan officer might have skipped over. So they said it's a pre-approval, but they haven't looked at everything. And then our crew goes through and they go, they show this much income, but they haven't made it for at least a year. That's not going to be included. They're going to come back and they're not going to be able to buy this house. The only way you can really know is if you have them approved with a different lender. Now, sometimes this is in the buyer's best interest because our rate is better or our programs are better and they end up using that company anyways. But when you're selling your house, it is definitely good to have any offers that come in run through a loan officer or a lending team that you know and you trust that can look at it closely. Any closing thoughts on that?
Yeah, we just had one of these where we asked for a cross-qualification from the borrower's lender. We were helping out the listing agent, and the borrower's lender said, oh, I haven't actually gotten his taxes yet. We say, well, you said the pre-approval. He's like, oh, yeah, but it was a pre-qualification, right? So it happens all the time. And we were actually lucky enough to be working with a real estate agent. We realized that borrower did not qualify. That would have been an offer they accepted and wasted 30 days in escrow while the lender tried to figure out an unclosable loan.
That's exactly right. And that's the problem, is there is no industry set definition for what pre-approval is. There's a loose group of rules that most of us operate under, but there's no law that says you're not allowed to call it a pre-approval unless all these things have been done, because different lenders have different requirements. And there is no way to create a set standard. So you have to know if the person you're operating with has integrity. And if they don't, these are all the little rules and tricks that we've seen that people will use, the bait and switch, which we talked about in other episodes. So for one, go check out other episodes of Mortgage Monday if you want to learn other of the little tricks that you can be taken advantage of by unscrupulous loan officers. But if you want to talk to a scrupulous loan officer like Christian here, Christian, how can people reach out to you?
Yeah, our website website's super straightforward, theonebrokerage.com. My email is christian@theonebrokerage.com, and I'm on all social medias under The One Broker.
You can also reach out to me at davidgreen24. And please do, if you'd like to get a loan, if you'd like to learn more about lending, if you'd like a career in lending, or if you just love bigger pockets. Christian, thank you for being here, fighting the good fight to protect the good people of the kingdom of Bigger Pockets from the enemies, the dragons, the White Walkers, the people that are coming in to try to take their money and trick them. I appreciate you as always. If you guys have time, watch another one of these videos. And if you don't, leave us a quick comment that lets us know what you thought about today's show. Did you learn something? Was there something you didn't know? Do you want to hear more about a certain element that we talked about? We read these and we will take these into consideration for future content. This is your show and we're just here to help. All right, everybody, have a good one.